this is our 5th episode of the year, and it's the month of May. So we're at least keeping up with one a month, eh? Like we used to do one a week, right?
We did.
Yeah, what happened?
And that cadence was good, but I think to ensure the quality and the material of the podcast, I think required a little bit of a slower pace. And then also, frankly speaking, over the last little while, depending on the time of year, right? Not to talk about seasonality too much. Things come up, and then also, you were away in Central Asia, and I actually found myself in Europe for a week.
Yeah. As well, we're not full-time finfluencers, right? We are actually running practices. I have 140-ish clients, 150 clients. I haven't counted lately, but our first prerogative is to them, serving them, especially during tax time, RSP time. So once a week podcasts are kind of thing of the past, I guess. How did we ever do once a week? I'm just thinking back to that.
It's fun because I think it's like a lot of things, right? Exercise. You want to make sure that you build that habit, you build that mindset, and then after that, then you can kind of adjust accordingly, right? There's a lot of things that are timeless, and I think for one thing in my perspective is that having just spent a little bit of time in Italy, the 8-hour difference, right? And I don't know from your experience in Central Asia, because it's even further, right? But when the markets are open, it ends, for example, it's evening time, if not middle of the night. And for that matter, I couldn't see any hockey from the first round, basically, because it was 4 a.m. when the games were on, or 2 a.m, right?
Yeah. So you went to Italy. When did you leave? When did you leave for Italy?
The day the Pope passed away, Easter Monday, in fact. That wasn't the reason why.
Did you fly? You flew Calgary to Rome that day?
Direct. Yes.
On WestJet.
On WestJet.
I came in on that plane. 787, right?
Okay. Oh yeah, Dreamliner. Yeah.
Yeah. That might have been the exact plane, because I left Rome the morning. So like probably when they would have announced it was while we were in the Uber to the airport. But then I heard about it at the airport that morning, and then we left about midday, I think. When the flight leaves from there?
I think because we arrived actually on the Tuesday. We left Calgary on Monday. We arrived on Tuesday. So you might have been a day behind if that was in fact the case. You were ahead of me, if you follow.
No, because I got in, because you go back in time.
You arrived on Tuesday, yeah.
So I arrived in Calgary the afternoon of Monday. Was it Easter Monday? No, it was Tuesday.
Tuesday.
Yeah, that was Tuesday, yes. Yeah. So I guess the plane that I flew back in maybe was the plane that you arrived on.
That I departed. I disembarked from. Yeah.
Like you got off the plane and found out the Pope died, right?
Okay. Yes. Yeah. I got off the plane and I knew the Pope had already passed away. Because the Papa Francesco sign started popping up already on the TVs in the airport and wherever else, right? And it was all the talk in Rome for the next while, right? So. Yeah. Okay. Well,
so we would have been in that what's called Fuminicho Airport at the same time. Did your plane? Okay. Did your plane land in a terminal where you had to take a train?
Yes, Terminal 3. Yes, you take take the train to go to Terminal 1.
That's interesting.
Wow. But the thing is that being able to, but the point there is that with the hour difference and the timing and whatnot is that you want to really sometimes decouple. And when you decouple or you stop looking at your phone, right? And then you realize that sometimes it was a reminder to me that not only is there other things in life than the markets, of course, right? But also that sometimes those little ripples that we talk about every single day, that sometimes there's news headlines, and God knows that there was headlines. But thankfully, at the time difference, I just kind of happened to easily more ignore it. And then I came back afterwards and all those little ripples kind of ended up back to where it was before, or in fact, actually, apparently the S&P was up for 9 consecutive days while I was away. So the joke was I should have just stayed on vacation, but
yeah, that's something I want to mention too. This is the first time that has happened since 2004, and so really with the markets, you get this a lot, this yin and yang, like the balance of the force. The worst always comes along with the best. We had 9 straight up days for the first time since 2004, and I think in 2004. It was a somewhat okay year in the markets, but this happened right after a really terrible time in the markets at the beginning of April. And we also had one of the best up days, I think, since 2008. So that was April. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. 2008. April 9th, I think it was. And then the markets plummeted the next day, but still,
they're tight.
we saw that
They
again.
happen to each
We
other.
saw that in 2020. Some of the historical best days in the market happened in March of 2020. Also historically worst days in the market. Some of the best years happened from 1929 to 1933. So, and that's what makes it so impossible to time the markets, because it all happens all clustered so close together. And when you have low volatility markets, you'll have some small down days, small up days. When you have these high volatility markets, huge up days, huge down days. But
And should you miss any of those really, really good days that precede the
mhm.
bad days, or follow after the fact, that then you're really behind, because
Yeah,
then you're second guessing yourself mentally, psychologically. But not only that, the numbers show that, like, yeah, that big day really helps towards that recovery. And if you miss
if you
that,
got
then,
out, like if
mhm,
you got out earlier in April, after these 9 consecutive updates, would you get in now? You'd be thinking, no way, I'd be buying it so much higher, and the markets are going to come down again. You're anchored to that lower price now. It
yeah,
just makes such an impossible decision. Like there's no way you can time that, and that's why you simply don't. So I was going to say you're lucky actually in the fact that you were in the office for those bad days, so you could at least
yeah,
be here, talk to your clients,
uh,
see the markets as things were happening.
mm,
And then when you're on vacation, everything was kind of hunky dory, 9 straight up days. Um, I was in Uzbekistan. The tariff announcements were the day that I departed. So my flight
Liberation
was
Day.
Liberation Day. Yeah, Liberation Day.
Hmm.
My flight was Edmonton, Toronto, Istanbul, Tashkent, and which was a couple of days. So Edmonton to Toronto was Liberation Day. The markets were actually up a little bit that day. And then the next day, so I think I landed in Istanbul the next day, but then the markets were already open again in North America. And that's when I'm like looking at my phone and seeing these huge red numbers. I'm like, I don't want to look at
Yeah,
this.
even Uzbekistan probably got 25% tariff, right?
I didn't see them on the list actually, but I don't think they really export much to the US. Uzbekistan, actually, interestingly, the most popular car in Uzbekistan is Chevrolet. And it's because GM has a partnership with Uzbek or Uzbek Motors,
Hmm.
which used to be Daewoo. They used to make Daewoo cars.
Ah,
Now they
yes.
make Chevrolets. So
Okay.
the streets are covered in Chevy Malibus,
Chevys.
smaller Chevys that you don't get in North
Yeah.
America, and these funny vehicles. I forget what they're called again. They were Daewoo's, but they were so popular that basically GM took over the design and they make them now as Chevys. They're these really really
Yeah.
narrow types of vans. They look like minivans, but super narrow and short, tiny wheels, and they're everywhere. And they're cheap.
Okay.
They're
Okay.
like
Yeah.
$10,000. I looked them up. Damas. Yeah, that's what they're called. The Chevy Damas. But yeah. So what I was going to say is that was the day I was traveling. I'm just basically intermittently seeing the markets. Actually, I had Wi-Fi on the Turkish Airlines flight. The day when things got really bad and hit their bottom, um, when you're 11 hours away, so 11 hours from the mountain time zone, what happens is you're so far away, you could at least see the markets close and then you went to bed when you were in Rome or in
Mm.
Italy. I had to see the markets being really red and then go to bed and then wake up and see how they closed. I'm that many hours away. Um, the one morning seeing that huge green number, that was a nice thing to wake up to. And the Oilers won that
Hmm.
day too, I think.
Hmm.
Um, the Oilers games when I was in Uzbekistan, I was actually able to watch the games on my phone, like watch the score, because the,
Okay.
the evening games were basically like 9, 10 in the morning there.
Morning.
So
Yeah.
that was far enough away time zone
Yeah.
wise that I could
Yeah.
actually follow along.
Yeah.
But but yeah, I was going to say too, my parting email to my clients before I left, I try to set the expectation and really remind people about these markets in 2023 and 2024 were not normal markets. Nor was 2022 really a normal market. 2022, the markets were down a bunch. And I told them, look, when I get back from vacation, the markets might be down. We might be at negative 15%. So they were at like negative 10% when I left,
Hmm. Hmm.
below their all-time high from January, February.
Hmm.
Maybe
Hmm.
they're at negative 50%, maybe they're negative 20%. And what I
Hmm.
showed them was the charts from 2022, just how things got worse and worse and worse gradually over a
Yep.
longer period of time. And that's the worst type of market to be in when you're hoping for things to bounce back like they did in 2020. That was a really quick bounce back. And like obviously recently now they bounced up back pretty quickly, but in 2022 they just kept getting worse and worse and worse. But those of us who just ignored it, ignored the noise, and just stuck with our strategy, we did okay. Because we look at that longer term chart from 2022. You just zoom out a little bit, things are okay.
Yeah. Yeah.
And I don't know if I've ever mentioned Nick Murray before on these calls, on these
Yep.
on this podcast. So I'm a big subscriber of his. I have for years. He does a client letter that I send out to every clients monthly. The one that came out for the beginning of April was perfectly titled. It was, "The market is inviting you to make the big mistake. Consider declining the invitation." And it's just what the markets get us to do time and time again. Make that big
Yeah.
mistake out of fear. And really, the type of markets we had, you think about the news that was going on. The markets
Yeah.
were repricing daily as if whatever Trump was messaging at that particular time was a permanent change to the whole world economy. Like all these tariffs and all that, it we can debate that till the end of days. But regardless of what the tariffs are, the market was pricing whatever he said. This is the permanent thing now. There's no debating. There's no negotiation. There's no chance he's going to change his mind, which obviously he does a lot. Today, I think the markets are pricing that a bit better now. They're pricing that he obviously flip-flops a lot. So I sent that to everybody. And if any listeners to this podcast want a copy, I can't post it publicly, but I can email it to you. Just send me a message on my website. I'll put the address on the screen. But yeah, I mean, this market down as much as 21% at the worst point, April 8th, I think it was. And that day you had that massive run up when there was that fake news about tariffs being called back,
Yeah.
whatever.
That's a callback. Yeah. Yeah.
And then back down again. If you try
A lot
to
of
do
whipsaws.
anything,
Yeah.
if you in that whipsaw, if you try to do anything, you're just basically screwing yourself over. You're messing up your retirement plan, messing up your future retirement. And you basically just need to, we were talking about exercising, but also have a good diet. Have a good diet of information. Know what type of information to tune out.
Yeah.
And what actually makes a difference to you.
And I think even if you felt that there was a call to action, or you needed to feel like you needed to do something, right? Whatever the result was, it would probably encourage or condone further similar behavior to then do more action in the future. When, as we sort of been alluding to, that oftentimes if behaviorally again, and ensuring that you stick to a plan, is that just maintaining it, how as difficult as it may be at times, is among the easiest things you can do. Because if you did do an action, and whatever direction it went, positively or negatively, then you'd be like, oh, I got to make up for that loss, or I'm gonna try to harvest again and do it again. I'm gonna flip this again, or do it again the next time it goes down 10%.
Now I'm getting into the markets with call options.
Yeah.
To try to make up for that mistake.
Naked call options, and I'm gonna double up, or whatever the case may be, right? And then it just further condones further action. And then at one point, one of those actions is going to be a misstep, potentially, and that misstep could be quite catastrophic, or become a very big hole or an impairment to work back from, right? So it is difficult. It is really, really difficult. And I found that, actually being physically removed and also digitally removed from times, and just timing wise, the time difference that we've talked about, that is practically speaking not to do, right? That can't do it. It helped remind me that, taking that step back, taking even a week back, right? Like perspectives, like, okay.
For me, it was wonderful. I saw the numbers on my screen go down, but I was not surrounded by all the noise. I did not see, there was no financial
echo
noise
chamber
on the screen. I wasn't getting all the emails and all that stuff.
And even just the coffee chat, the quote unquote water cooler talk, or
talking with a coworker, all depressed. Yeah. And the thing too, what really surprised me is no clients called or emailed. And in a perfect scenario, I'd be in the office and be outbound to them. But obviously they knew I was on vacation. I let them know. Yeah. But nobody called with concerns. I was worried that some people might call and just cash everything out. But maybe I did prepare them right for that. And I mean, I don't want to toot my own horn. Maybe that's what a good advisor can do, is get people to not make those mistakes. Really good article, actually. I'll share it with this podcast as well on the blog post. By a guy by the name of Joe Wiggins. I think he's a financial advisor in the UK, but he writes a really great behavioral investing blog. And the article he wrote was Bear Markets and Bad Decisions, how when you got these bear markets, and like we were in a quasi bear market this past month, the big threats to people's portfolio is not number go down. It's literally the actions that we take, the mistakes that we make. That is the big threat. That's always my worry. I have all my money invested. I'm 100% stocks in my portfolio. You probably are too, right? My portfolio went down last month. It's still down. A lot of my clients, they're everywhere from 40%, 30% at the lowest risk level, up to 100% stocks. I'm not concerned with that number being down to the month end of April or whatever. What really concerns me the most is what if someone makes that mistake, abandons their financial plan, especially when I'm not around, or otherwise, just puts themselves in that situation where now they're out of the market, they're in a savings account at 2%.
Yep.
When are they going to get back in? Are they going to get back in after the dust settles, as they always say, which is always after things have gone up? I mean, right now the dust is not settled, and we're up 10% from those lows. Fair bits, anyways.
Yeah. Plus. Yep. But yeah, it's sentiment understood. Yeah. That's when that recovery's happened. So, it is. Yeah. So again, a little bit of a reminder, and to kind of take a step back again, and maybe if the mechanism in place is to kind of say, let's just turn it off for a week and just kind of see how it is tough, but it's feasible, it's doable, it's a little bit of training it, but you know what, every now and then being forced to decouple may not be a bad practice, right? But I think one thing you mentioned to me before is that a lot of times the market, we call it the stock market, we don't call it the business market, right? And because they're equities, and that's what gets traded or exchanged on these markets. But underlying, and we've talked about this before, underlying the ticker symbol that gets thrown around or that gets entered into the screen is fundamentally speaking, these are businesses, these are people, right? They're pretty much all of them. They still turned on the lights the next day and ran their business. And one of the biggest issues with a lot of the corporate leaders in any country, Canada, United States, or elsewhere, is that because of a lot of the uncertainty related to, say, the tariffs, I don't know how you could, as a CEO, make a decision that has implications for multi-years. A time period that's longer than a 4-year presidential cycle, right, or an election cycle, to then say, I'm actually going to completely move a $20 billion facility from another country and bring it over to the United States so I can make semiconductors or what have you, right? Those things take a long time.
They'll tell him they will do that just to sort of calm him down, give him a W, give him a win. Yeah, we'll move $100 billion factory to the U.S. Sure, Donald, we'll do that.
Yeah, but the idea is that like these are people, and they've been put into positions to steward other people's investments, their money, people's jobs, their local economies, and what have you. And so they have to think in a longer term perspective. And I think that's one thing. Again, a lot of times, we can spit out tickers all the time. I think I told you at one point in the past, like I have this affliction, I feel like when I drive, right, and I see license plates, and I see like these just a random three letter setup in somebody's license plate, and I can tell you, boom, which company that is, or I chuckle like, oh look, it's whatever, right? And all of a sudden I'll be driving or riding, and I'll just spit out I'll just say a name, and the person beside me, sometimes my wife, and they're like, what? Right? And it's like, oh, like the license plate, it's right in the license plate. So but they're not tickers, right? They're businesses, they're enterprises, they're people. These are supply chains and jobs and economies and all that. And so if you think of yourself as an investor, as a part owner of these organizations, perhaps it might help you in investing for, having that longer term mindset.
And seeing those lines go up and down, and like worrying what they're doing when they open, the markets open, the markets close. And remember too that S&P 500, the TSX, those indexes are composites of all those little tickers. From the moment I started reading and listening to Nick Murray's stuff back in 2008. Yeah, it was the fall of 2008 when things were really, really bad. It was the first time I heard from him. And one of the things he's repeated oftentimes over the years, he used to always say, the great companies of America. Nowadays, he says the great companies of America and the world. That's what we're investing in. We're not investing in a stock ticker. We're not making a bet on the markets. We're taking part in the global economy, the profits of these companies, we're collecting some of the dividends that they pay us, but we're taking part in the great companies in the world. And if you can think of it more as businesses, you're right. This is a lot how Warren Buffett invests. By the way, he announced his retirement on the weekend. Berkshire Hathaway stock I just looked at is down 5% today. So it's partly why the markets are down a little bit and why that winning streak ended. It is a pretty hefty stock now. What are they now? They're over $1 trillion, right? Maybe still.
They got to that. They got to the 9 and the 10-digit number. Yeah,
but again, like this stock is down because this one little bit of news that everyone knew was going to happen anyways has the enterprise value of all these businesses that are owned or partially owned by Berkshire Hathaway, have they really gone down by 5%? Now, their market cap is $1.1 trillion.
Yeah, so $55 billion.
Billion dollars. Has $50 billion just disappeared today, Monday, May 5th? Mm-hmm. No, it hasn't. It's just, if we think about it more as, if you were buying this particular stock, you're owning a collection of businesses that a wise old man decided had some good value to them. Mm-hmm. If you're buying any type of stocks, you're owning businesses. And to this, I kind of asked you basically a thought exercise. You can give me your responses. I'll give my responses. What are some of the businesses that we have done business with today? Or on a daily basis? What are the companies we interact with on a regular basis?
So I will caveat some of this because the day-to-day, like waking up at home and what have you, a lot of the things we are more directly exposed to tend to be kind of what they call consumer staples, or sometimes consumer discretionary. Mm-hmm. So, things like soap and toothpaste and the classic sort of like things of that nature, right? So some of the names are actually, and so it's not going to be dominated by your investments should not be necessarily dominated only by that subsector.
And caveat too, none of these companies we're mentioning are recommendations either. It's just basically understand that these are businesses, they sell stuff,
that help our lives.
Stuff. Yeah. There might be a wrench thrown into their business model because of tariffs or whatever, but there will be an election in the U.S. again in 3.5 years. There will be a new government at some time. There will even be an election less than 2 years from now that will change the makeup of government in the U.S. These businesses, they just need to basically shelter in place under whatever circumstances are going on right now. Maybe profitability will be lower, and that will be reflected in the stock price. But eventually, if they are good, and a lot of companies nowadays in the U.S., I mean, the cash hoard in the U.S. is greater than it's ever been for a lot of these big companies. They can withstand a lot of negativity, but yeah, like you said, these would be a lot of consumer companies.
So I woke up, my alarm rang off my Apple phone, AAPL. Went to the washroom, brushed my teeth. My toothpaste came from Colgate, CL.
I'm a Procter and Gamble guy. I use Crest.
PG. Okay, there we go. Put on my pants. They happen to be Lululemon pants, so LU. Had breakfast. It was cereal. I turned out that Quaker Oats or Mills is actually owned by PepsiCo, so PEP.
Okay.
I actually had to check my app for a flight, so it was Air Canada AC. I got a phone call from my wife because my youngest son had to go visit the orthodontist. Teeth costs, dental costs. So there's a couple names. It's a bit of a stretch, but there's a Canadian company called DNTL, Dental Corp. They consolidate dental clinics across Canada. Also one of the largest dental supply companies, whether it's x-rays or, some of those tools that the dentists and the hygienists use in their mouth, or even some of the molds and what have you, come from Dentsply Sirona. That's a name that for those in the world, in that world, will know quite intimately. Their ticker symbol is, interesting enough, X-ray, XRAY. Did some Googling, I should say Alphabet, GOOG. Mm-hmm. I checked on Reddit, RDDT, came to work at Canaccord, CF, I should say.
And you have your investments with CF too, right?
Yeah, invariably. Yeah, that's right, of course. My wife asked about Costco, so COST. And, then I was looking at, I was having a phone call at the office. And then what I ended up using, I used my Lenovo ThinkPad, which is actually 0992 in the Hong Kong exchange, and it had some Cisco stuff, right? So nevertheless, you can kind of see. Oh, and if I wanted to say actually one more thing, because of the orthodontics, I had to go check on Manulife on the app, because that's who our healthcare provider or insurer is, to see what kind of coverage I might get. And there's an insurance company, MFC. So, just without even fully going through it the full day, you can kind of knock off some names around me. And I'm be curious to hear the tickers or the names that you came up across.
Yeah, you've covered a couple of them. I found out my life is completely bereft of Apple. I'm not an Apple person. So no Apple. Samsung phone.
Okay.
Android, obviously, part of Alphabet, and I use their services a ton. I was going to say also, I use a lot of ChatGPT these days. Are they publicly traded yet? No,
but Microsoft,
Microsoft
is partially owned by Microsoft, MSFT software. Right?
MSFT is obviously big. We're using a Windows computer. Microsoft
Office,
Teams here is how we communicate outside of this. We're using Riverside, which is a private company, but we publish our podcast on Spotify, which is public. My day-to-day stuff too. So how does this thing work? Tell us. Also, that's how I get my TV at home. I have a Garmin watch. Garmin's publicly traded. Philips. So I trimmed my playoff beard this morning. So obviously I'm not shaving until the Oilers are out, but I got to trim it a little bit.
That's a Dutch Philips, company, I believe, right? Originally.
Yeah, Philips NV or something like that. Yeah. Procter & Gamble, like I said, is my toothpaste, other stuff. I use Listerine every morning too. I looked up that company. It's called Kenvue that owns it. I'm not too familiar. You mentioned PepsiCo. I drink a glass of Simply Orange juice every morning. That's Coca-Cola that owns that.
Okay.
I drive an Audi to work, or not to work. I drive to the bus station where it's parked right now. VWAG, also Audi, which is kind of a weird mishmash of companies. We could go on.
NFI, one of the largest bus manufacturers. Almost every bus you see, you walk by in Canada.
I was wondering about that. NFI. Yeah, you know that. Okay, that's good.
New Flyer Industries. Yeah.
Amazon, I use all the time. Also Prime.
AMZN.
Last night was Sunday. I watched Last of Us on HBO, which is WB Discovery. Other stuff I watch, I'm looking forward to whatever comes out from Taylor Sheridan next. All those shows like Yellowstone. Yeah. That's Paramount. Of course, Netflix. Always watch something there. Disney lately, because they're coming out with new episodes of Andor. Everyone must watch Andor, the best Star Wars series ever. Huge Star Wars nerd here.
Yes, yesterday, May the 4th.
Yesterday was May the 4th, so big day for Disney, that's for sure. How do I power it all? With Epcor and with solar panels, but mostly Epcor. My banking, I won't say which bank, just because of for my own security.
But let's name them off: RBC, BNS.
Obviously, all my investments are with Canaccord. And system-wise, what is this? This is, I think, still a publicly traded company, Plantronics.
Oh, yes.
They're now Poly, which is interesting. Poly was Polycom, company I worked for when I was in college. I did
as a student. At Boston,
I did. They did basically this. They did video conferencing back in the days when it was still very, very new, and Plantronics took them over, and I think took over the name, so it's now called Poly. Not sure how it's listed now, but otherwise Cisco for phone. I also have a Lenovo ThinkPad. It looks like it's got an AMD Ryzen chip in it.
Okay.
If it didn't have the AMD, it would have an NVIDIA. Like at home, I've got NVIDIA. This phone probably has a Qualcomm chip, I'm guessing, a Snapdragon.
Yeah.
The Samsung or Samsung.
There's dozens of product suppliers in any smartphone. Yeah.
Yeah. And of course, my computer at home has an Intel.
You know what? I just thought about this. Yeah. You're wearing glasses. I'm wearing glasses. Excelsior Luxottica. There we go.
These
Starbucks,
are,
Xbox.
Calvin Klein.
Essilor Luxottica, most likely. Yeah.
I know I've had glasses from them, like Yves Saint Laurent are part of their chain. And I had a coffee before. I don't usually support this company, but I just had a gift card, so.
Well, there you go. Someone supported it. Key point, I think, is that even though we named a couple dozen names are right there, the idea here is that they're all offering products or services that somebody is using, right? And they've enhanced our lives. Right. If I think about some of the ruins, like I was talking to my son in Rome, and we just walked through a neighborhood, and there's like some remnants of an aqueduct, and it's like 2,000 years old. but that engineering, without that
Right in
running
front
water,
of the Palatine Hill there, that aqueduct.
yeah, like it's just
That used to be a huge
without,
aqueduct. I looked at it on the map. That's pretty cool.
yes. And how the heck did they design that back then? And they did it, but because they did it, they had running water, right? They had baths and what have you, and it improved their lives. And it can be argued that some things like social media and other things like that can, are maybe
Mm-hmm.
has a lot of cons with their pros, right? But the other things like food and travel and electricity and clothing, whatever, they're all there to improve our lives. And if we think about that, those are things that we're actually spending our own money on. That gives you an idea. It's that Peter Lynch principle, like invest in what you know, or at least invest in
Mm-hmm.
the things that are around you. And it makes a connection, right?
Mm-hmm.
And again, I think this whole exercise is there. This mental exercise is to say, we're not just investing in tickers. These are things that are actually viable, useful, important services and products. And as investors, we can benefit from that as well. But not only that, we know that these things are going to be used day to day, month to month, years into the future. So as an investor, as an owner, have that longer term outlook
Mm-hmm.
and that perspective, as opposed to that minute by minute, hour by hour thing that we can sometimes fall into that trap, right?
Yeah, and I'll just sort of point out one thing. I know you might be more the Peter Lynch kind of thinking of invest in what you
Mm-hmm.
know. If you go that route as an individual investor, it can sometimes lead everybody into the same companies, and then those prices get. Yeah, if you own the index, and I'm getting a proponent of that.
Then you got everything.
Looking at the S&P 500 right now, we mentioned these companies
Yeah.
already: Apple, Microsoft, Nvidia, Amazon. Meta is one thing we forgot too, because we communicate a lot on Facebook and WhatsApp. Probably when you were over there in Europe, you were using WhatsApp a lot, right, to keep in touch with people.
Admittedly, yes. Yeah, I don't have a Facebook page, but I use WhatsApp. Yeah.
Berkshire Hathaway we mentioned, Alphabet we mentioned, Broadcom. And when you were in Rome, how did you purchase dinner? Visa, MasterCard,
Yeah,
American
quite a few
Express?
times. Yeah. I used my card. Used Apple Pay on my phone, but has the underlying rails of the credit card, right? Sometimes there's cash, of course, right?
Exactly. And I just rattled off, between us, we probably rattled off about top 10 companies, top 15 in the S&P 500. And again, when you're looking at that market number, that was down at low point, 21% on April 8th or whenever. That's these companies. That's not just some little thing that we bet on. That is these particular companies. And if things are going to be tough going for them, they won't always be tough going for them. And they will figure out a way through it. Apple's already decided to shift production over to India. Amazon's already tried to, fight back against the tariffs by listing. I don't know if they're going to go through it. I think they retracted.
Yeah,
they're going to list the tariff percentages on their imported Chinese goods.
That's right.
But these companies, they'll make it through whatever happens in the next couple of years. They'll make it through that. I don't think we're going to stop using any of that stuff.
No. And there'll be other companies that will innovate because of this situation potentially and will grow and maybe in 10 years' time become the next trillion-dollar company that we're not speaking of right now, right?
Belaboring the point, I guess, that there's all these companies. They're fighting to exist, fighting to do what they do. And they'll get through it.
They employ people, they pay taxes, they purchase things from other suppliers, they sell things to other consumers, and some will do better than others, and some are just fine the way they are, right? But again, these are business owners, and I think business owners treat their investments very, very differently than traders. Traders are a completely different ball of wax, right? There are traders out there, and they make a market too. They're part of a market. But then there's the others who, and I think for most of the investors and the clients that we work with tend to be more of the longer term investors that are much more aligned or best aligned with that business owner shareholder mentality. I actually do know somebody that flew to the Berkshire Hathaway AGM for the first time this past weekend, and they were very excited to go. And they wanted to go before. And I guess it was good because he's stepping down as the CEO.
It was his last chance, yeah.
So, it turned out great for him. But the idea there is that, he felt very much empowered as a shareholder of that company. And Berkshire has a unique sort of status amongst shareholders. There are other companies that elicit a similar attraction and ardor about it. But if you think about it, they're simply shareholders of a company. And so if you're a shareholder of other companies, treat it as, treat your investments as a longer term potential, and not just, I'm going to sell my business today and buy it back in a week, right? Business owners don't do that.
I'll admit I didn't have the time to watch any of those proceedings this past weekend, but I do read the letter every year. And
Yeah.
I share it with my clients as well. And the reason I share it again, like you said, I love the way that Warren Buffett discusses owning businesses.
Mm-hmm.
And down to the point of where he's talking a lot about dividends and share buybacks. How, for example, he said years ago he had a certain percentage of Apple, which he just held on to. And when Apple bought back shares, his share of the overall company grew. And likewise, they've done the same thing in recent years too. Berkshire Hathaway's bought back shares so that people who just own them, their share of the company has grown. And again, like I said, it's this completely different, exact opposite orthodoxy of what you see on the noise networks,
Mm-hmm.
of really seeing this as investing in companies. But buy whatever and know that you own a basket of businesses, companies.
Which is, I think, what a lot of those business leaders right now are doing. They're not making quick decisions based off of the current economic uncertainty and policy uncertainty. Sometimes it's in the form of just physically being removed, as you and I experienced recently, from a computer screen. Sometimes it's just a check on to see what happens. Oh yeah, let's just turn off the phone and not look at the app, right? But it's worth talking about every now and then as a reminder to say, hey, things will happen, but they tend to work themselves out.
Mm-hmm. Mm-hmm. Anyways,
Sounds good.
so you had a good time with the family in Italy.
Pizza, pasta, gelato. Walked a
Gelato,
lot of
that's what I
steps.
missed out. I walked a ton of steps. So my trip was, like I said, Uzbekistan for a week, Crete, Greece for a week. That was sort of meeting up with some family there.
Mm-hmm.
Not living there, but our family from Austria. We kind of met up with them and stayed at an Airbnb on Crete for a week. And then the last stop, Rome. And in Rome, we had an Airbnb just a few streets away from the Colosseum. And as an afternoon walk, I was able to walk all the way around Colosseum, Forum, up to the, what's that big tall monument? It was built in the 19th century, I think, whatever. And then over around the Palatine Hill, around the Circus Maximus, and then back. And that was a nice afternoon walk, but lots of steps. Really amazing city. Just like beautiful in terms of, like, the middle of the city is like a park, right? So many of those umbrella trees. What are they called? Those umbrella pines or something.
Exactly what you're saying. But
Yeah.
there's a reason why thousands of people go every day, every year. And it wasn't even peak season, right?
It must have been 100,000 people in that town. It was like Disney World. I mean, you go there and you have to sign up for the ride. I signed up to see the Coliseum at 4:00 on a particular day, or 4:30. I went there a bit early. I thought I was going to get bounced from the line, but yeah, and I couldn't get into the Vatican. I think we were just way too late in trying to get tickets to that.
Yeah. I think in the future, the Roman Empire, not every empire lasts forever. Sometimes they end up in a they end up lasting for a very, very long time. But it'd be interesting, perhaps in the future, to talk about Pax Romana, Pax Americana, and see what that might look into the future. But
I watched both Gladiator movies on the plane ride back, and interestingly, even though those movies are so they kind of create a fiction within a historical realm, but there are some real aspects to it. Like,
sure,
in the Forum, towards the end of the Forum, towards the hill when you go up towards, again, that monument I was talking about, I forget what it's called. There is one of those triumphal gates, and I looked it up while I was there. I used ChatGPT. I took a picture of it to get it to tell me. This is so amazing. If you go on a tour anywhere, I was in Knossos on Crete, and no tour guide. I just took pictures of things and asked ChatGPT to tell me about it, and it could recognize these pictures and tell me about it. And so in Rome, I took a picture of that one gate, and it told me it was actually built at the time of was it Emperor Severus, not one of the last good emperors, but after Marcus Aurelius. Marcus Aurelius was the last good emperor. Then there was Commodus. This is really the fall of the empire. Really, there was suddenly there was nepotism. Commodus was Marcus Aurelius' son. Prior to that, the emperors were kind of selected. They were adopted. One emperor adopted another one. So what that gate was built by Severus for his sons to mark their triumph in Parthia. His sons were the two what were called the twin emperors in Gladiator 2, Geta and Cala. I don't want to spout names and not know my history, but the two sons. And it actually shows on that gate how one of the sons' names got stricken off.
Oh yes.
I forget who was Geta killed his brother, or Geta got killed. I forget which was which. But just like in the movie, Macrinus kind of convinces one brother to kill the other brother, and that happened in real life. And when that happened, the surviving brother completely wiped out the name of his brother from all of history, and he basically struck his name off that gate, which is so cool.
Erased it from history.
Seeing that kind of history is really cool. And I mean, that was kind of towards the end of the empire where things were kind of going awry. And, after that, it was kind of just more incompetent emperors, usually for a very short time, a lot of turnover. It was kind of like the Oilers coaching position back in the 2000s. You'd have like 3 coaches in 3 years or whatever. That was the Roman Empire towards the end.
You're going to talk about the certain governments instead. Okay, you want hockey. All right.